Robinhood officially launched in 2013, and since then, they've had such a profound effect on the investment industry, it's been called the Robinhood effect. Before Robinhood came out, it was customary to pay trading commissions to your broker in the range of $5 to $10 per trade. Then, Robinhood changed the game forever by offering commission-free stock trading. This has led to 23.9 million people using the app to invest, with a total of $130 billion in assets under management. I've been covering Robinhood since 2016, and I've written hundreds of articles about them for my blog, investingsimple.com. In this video, I'm going to be sharing my 8 years of experience with you in this ultimate guide. Now guys, dozens of hours went into making this the most in-depth Robinhood tutorial out there, so if you appreciate that, please be sure to drop a like on this video and subscribe. And feel free to skip ahead using the table of contents down below. Let's dive in. Let's start by covering how to actually open a Robinhood account. In my last tutorial, we did this from scratch with a brand new account, but here's an overview of the steps involved. First, you'll want to visit ryanoscribner.com/Robinhood or click the affiliate link down below, as this will get you a free stock when you sign up. The free stock is worth up to $200, and you get to choose your free fractional share from a list of 20 leading American companies. After clicking the link down below, this will bring you to a sign up page where you'll create your login, and this is what you'll use when you download the Robinhood app. On the next screen, you can click the button to be redirected to the App Store, or you can go there yourself and simply download Robinhood. Go ahead and install Robinhood and open the app. You'll then sign in with the same login details that you created earlier, and this will start the account opening process. Now, Robinhood is required to collect certain information from you, and this includes your address as well as your social security number. Your trading activity will be reported to the IRS, and they will supply you with the tax forms at the end of the year, and we're going to cover Robinhood Taxes later. The next step is to answer a series of questions about your investment experience. They will also ask you about your employment, as well as a few insider trading related questions that are required to open any brokerage account in the US. The final step is to review and agree to the tax certification, stating that you entered everything correctly. After that, your application is complete and under review, and it usually takes just a few minutes to get approved. And they'll email you if they need any additional information. Now, once your account is approved, the next recommended step is linking a bank account. All you have to do is click on the person icon in the bottom right and then the 3 lines in the top left. This will open the main menu, and then you can click on transfers. From this screen, you're going to scroll down to linked accounts and click on the add account button with the plus sign. You have the option to link a debit card as well as up to 3 different bank accounts. Linking a debit card will allow you to do instant transfers with a $5,000 daily deposit limit. But even if you link your bank account directly, you'll still get access to an instant deposit of up to $1,000 when you fund your Robinhood account. You can also use Apple Pay to initiate a transfer using your debit card without linking it to the Robinhood app. If you do link your bank account directly, Robinhood uses Plaid for that connection. This is a way to instantly link your bank account without having to type in your account and routing numbers. Instead, you'll enter your login credentials for the bank, and this data is fully encrypted and it is not shared with Robinhood. Once you enter those details, it will have you choose which bank account you want to link if you have multiple. Now that we've covered those steps, I can open up my Robinhood app and show you everything else in real time. The next step you're going to want to take is depositing funds to your new Robinhood account. Here we are inside of my Robinhood account for demo purposes, and what we're going to do now is initiate our first deposit of $50. In order to do that, you're going to click on the button here that says buying power, and your app is probably going to say $0 if you just opened it, and then you're going to click on the black button at the bottom that says deposit funds, and this will pull up the screen here where you can initiate the transfer. Now, if you have multiple different accounts linked, you can click here under the From section and choose your different accounts, or if it's the one that you want to use by default, you can leave it just the way it is, and then you're going to simply type in the amount of money you're looking to deposit. So in this case, we're looking to deposit $50 from my linked bank account into my individual brokerage account. And once that looks good to you, you're going to click on the review button. Now on this screen, you're going to review those details. And if you wanted to do a recurring transfer, you can change the frequency here to weekly, twice a month, monthly, or quarterly, but we want to just do a one-time transfer for this purpose, and then you're going to click on the transfer $50 button at the bottom, and this brings you to the confirmation screen that the deposit has been initiated, and it's expected to complete about 6 days later, since I do have the weekend coming up. But as mentioned earlier, you will get access to instant deposits of up to $1,000 as a Robinhood user, so that means you can invest your money immediately before it arrives in your Robinhood account. Now, with that being said, you want to make sure that you have that amount of money in your bank account, otherwise you might face a reversal, and this can mean that you no longer have access to features like instant deposits in the future. So we're going to click on continue, and you can see now my buying power just increased by $50. Now, before we make our first investment, it's important to understand how to actually make money investing in the stock market through Robinhood. There are two common ways to make money through the stock market, and that is through asset appreciation as well as dividends. Dividends are a way that well-established companies will share a portion of their earnings with the shareholders, typically through quarterly cash payments. Not all companies pay dividends though, as many companies are not actually profitable. There's also growth stocks which are reinvesting their earnings instead of paying dividends in order to grow market share as fast as possible. The other way to make money through the stock market is through asset appreciation, or the value of the shares going up over time, and this is the old adage, buy low, sell high. In order for the stock to appreciate in value, you need to have more buyers than you have sellers of the stock, and this will be dictated by the company performance. In simple terms, you make money through the stock market by investing in companies that are expected to do well over time and then holding on to those shares. So let's go ahead and make our first investment using the Robinhood app. One of the most popular investing strategies out there is investing in a low-fee S&P 500 ETF or exchange-traded fund. Even Warren Buffett himself recommends this approach for most people. Now, I have a full video about S&P 500 investing that I'll put in the corner, but here's a basic overview. The Standard & Poor's 500 Index is a market value weighted index of the 500 largest publicly traded U.S. companies. And market value weighted simply means that the larger a company is, the more weight they will carry in the index. So when you invest in the S&P 500, a large portion of your money goes into stocks like Microsoft, Apple, Nvidia, Amazon, and Meta because of how large these companies are. Now, FinViz has a heat map that will show you a visual of this in action. The larger the square is, the more of your money gets allocated there. Now, according to NerdWallet, the S&P 500 has returned about 10% on average per year over the last century, assuming you are reinvesting dividends. And later on, I'll be showing you how to enable automatic dividend reinvestment with the Robinhood app to make sure you are maximizing your return potential. The S&P 500 provides you with broad diversification across a large portion of the entire US economy. When you invest in the S&P 500, your money is spread out across all of these different sectors and industries. So even if one particular company or segment of the economy takes a nosedive, the rest of what you own will help you offset that, and that's the benefit of diversification. You also have the benefit of being able to follow a set it and forget it approach. That means you can fully automate this strategy and then spend your time doing whatever you want to, instead of actively managing a stock portfolio. So let's go ahead and make an investment in the S&P 500 now using Robinhood. And we're going to be using the Vanguard S&P 500 ETF, which trades under the symbol VOO. So every stock and fund out there that trades on the major exchanges has a set symbol, and you'll need to know this in order to find the stock, but you can also just type in the name of the company or the fund. What you're going to want to do is click on the search bar in the top right, and then we're going to type in VOO, which is the Vanguard S&P 500 ETF. Now, as you can see, I already own a fractional share of this ETF from my prior tutorial. So if we click on that, this will bring up the page here for the Vanguard S&P 500 fund, and we can look at the performance over different periods of time. So over the last week, it's up just shy of 1%. Over the last month, we have about a 2.8% return. Over the last 3 months, you're looking at about 8.4%. Year to date, the S&P S&P 500 is up an astounding 18%, give or take. Over the last year, it's about 25%. Over the last 5 years, it's almost an 88% return. And the maximum here, you can see how the S&P 500, despite the ups and downs, has continued to move in a positive direction. And if you wanted to click on the chart here and look at the specific price action, you can move your finger along just like this, and it will show you where the price has been. And if you double tap here, you can compare different time periods to see what the return was of the S&P 500 or whatever you're looking at in that set window of time. Now, if we scroll down here, it's going to give us information about my existing position in the S&P 500, and you can see here that I have 0.04176 shares that were purchased at an average cost of $458.33. So as a result, I've already experienced a total return of almost 12% on this fractional share investment that I made just a few months ago. Now, keep in mind, the S&P 500 doesn't always go up. If we revisit the chart here, the S&P 500 actually declined by about 25%, but despite that, it did continue to go up in value thereafter, which is why you want to generally ride things out when you're making a diversified investment like something like the S&P 500. If we keep scrolling down here, we'll get more information here about the Vanguard S&P 500 ETF. And one of my favorite features here is that you can get a visual of what is actually held within the fund. So earlier we took a look at that FinViz heat map that showed all of the different segments of the US economy in the S&P 500, and this gives you a percentage breakdown. So when you invest in the S&P 500, about 31.5% of your money goes right into tech companies, and then financial companies are the second largest component at about 12.5%. Then you have healthcare at 12%, consumer cyclical at 10%. I won't go through all of these, but this shows you a visual breakdown of what segments of the economy are carrying the most weight in this investment. And if we click here on the top 10 holdings, this shows you what percentage of your money goes right into the top 10 companies. And it's pretty crazy because 34% of all of the money put into the S&P 500 goes right into just the top 10 companies alone, and then the remaining 66%, give or take, is going into those other 490 companies because of how dominant these have become. So when you invest in the S&P 500, about 7% of your money goes right into Microsoft, a little under 6.5% goes into Apple, about 6% of your money goes into Nvidia, about 3.5% goes into Amazon, and then you have Meta Platforms, both share classes of Alphabet or Google as well, making up a large component. You have Berkshire Hathaway, Eli Lilly, and then JP Morgan Chase making up the largest components of the S&P 500. If we keep scrolling down here, you'll see a statistics section which will give you information about the trading volume as well as the total market cap, and it also shows the dividend yield. So for example, based on the current share price, the yield for this ETF is 1.27%. So you would earn that dividend yield on a quarterly basis, and as mentioned before, if you want to maximize your return potential, you'll want to reinvest those dividends, allowing you to earn future dividends from the dividends you earned prior. Now the volume at the top right is showing you how many shares have traded hands so far today. So if you keep an eye on that, you're going to see that continuing to go up over time. And you can also see here that they have an expense ratio listed. With fund investments like ETFs, there is an expense which is used to pay the fund managers, but Vanguard has some of the lowest expenses in the industry, and this comes in at an expense ratio of just 0.03%. So on $10,000 invested, you're talking about $3 per year in expenses, and that is automatically taken out of the fund. It's not something that you have to pay separately or anything like that. If we keep scrolling down here, you can also see the people also own section, which gives you other investments that are popular for those who also own VOO. And then we can look at the history here. And this is interesting because it will show you where my small dividend was reinvested. So for the very first time here in this account, I bought shares in April of 2024. I bought $20 worth, and then I actually sold off $1 worth of this in June for a demo purpose. But you can see here that in July, I received a 7 1-cent dividend, and this was automatically reinvested back into the ETF. So this dividend reinvestment allowed me to buy an additional 0.0416 shares of VOO at a share price of $507.25, meaning that this little fractional share will now earn future dividends itself. And then if you scroll down further, you can look at the average annual return from this fund investment. So if you take a look here at the last year, it's up about 25%. So we're in a pretty strong bull market right now. Over the last 3 years, the average return is 10%. Over the last 5, you're looking at about 15. Over the last 10, it's a 12.8% return. And since September of 2010, it's been about a 14.4% return. So we mentioned earlier that NerdWallet said the average return from the stock market has been about 10% annually, but in recent years, we have actually seen a higher average rate of return from the S&P 500. So that's it for the details on the home screen now. Let's go ahead and purchase a fractional investment in the S&P 500. What we're going to want to do is click on the trade button here at the bottom right, and then we're going to click on the buy button, and this is going to bring up the order ticket window. Now we're going to get into the different order types available through Robinhood later on when we invest in a stock, but for now I'm just going to show you how to invest in fractional shares of VOO. By default, it's set in dollar value, so if you wanted to put $1 into the S&P 500, you would do $1 and then click on review, and this would buy you 0.00194 shares. But for this demonstration here, I want to actually put $25 of the 50 that I deposited into the S&P 500. So we typed out 25, we're going to click on review, and then once you're all set with the order here and everything looks good, all you have to do is swipe up to submit that order, and just like that, the order was filled, and we bought $25 worth of the S&P 500 ETF, which is 0.048743 shares at an average price of $512.89. Now, if you want to view the order, you can click on this and it will show you more details about when it was filled and things like that. But for the most part, that's all you need to know. And then when you scroll up here, it now adjusts your overall position. So now my total return is just 5.15%, but it's because I own a larger amount of this fund at this point in time. But let's say there's a particular company that you believe in that you want to own shares of. We're now going to buy a fractional share of a popular stock, but first it's important to understand what a stock actually is. Stocks, also referred to as equities, are financial instruments that represent a fractional ownership in a real company. When you buy a stock, you purchase shares, and each company out there has a set number of shares that exist, and this is referred to as shares outstanding. For example, if you wanted to invest in Microsoft stock, there are currently a total of 7,430,000,000 shares outstanding. The value of these shares changes all day long during market hours, which are from 9:30 a.m. to 4 p.m. Eastern Standard Time, Monday through Friday, excluding holidays, and the value changes based on people buying and selling shares. If Microsoft is doing well and reporting high revenues and growing profits, there's going to be more demand for those shares or more people buying them versus selling them. But on the other hand, if Microsoft slips up and reports bad numbers, there's going to be a lot of people selling the stock or a big supply of shares coming to the market. But for the most part, it's not people like you and me who are influencing the price of a stock. Instead, it's institutional investors who are managing billions to trillions of total invested capital. And real quick, guys, if you've gotten value out of this video so far, please do me a favor here and drop a like as well as subscribe and hit the bell for future notifications, as it will really help me out. Let's go ahead and buy a fractional share of Microsoft now. So here we are on the home screen of the app once again, and you can see here that we still have $26 of buying power remaining from that $50 that we put in, as well as the $1 that I had sitting there in my buying power. What we're going to want to do is click on the search icon once again in the top right, and if you don't know the symbol for the company, you can just type in the name. So we're going to type in Microsoft, and we can see that it auto-populates at the top. We're going to go ahead and click on Microsoft now, and it brings up the page here for Microsoft stock. Just like before, you can take a look at the performance over different spans of time if you want to see how this individual stock has done, but we're just going to do a really quick version here of buying the stock, and then I'm going to show you the different order types. So what we're going to do once again is click on the trade button, and then we're going to click on buy. But before I actually invest, I want to show you the different order types available through Robinhood. Each one of these order types works differently, and this impacts the buying and selling of stocks. By default, as you can see at the top, it's a market order. But if you want to change this, you'll click in the top right where it shows dollars, and you can see the different types of conditional orders listed below. When you buy or sell a stock on Robinhood by default during market hours, it's going to be a market order. And this simply means that you're going to get the first available price for buying or selling the stock, and you'll have near immediate order execution. It's usually just a few cents difference between the bid price, or what people are looking to buy the stock for, and the ask price, which is what people are looking to sell the stock for. So when you place a market order, it's going to fall in between those two. Market orders are best for those that are looking for immediate order execution, but if you wanted to specify the price exactly that you're buying or selling a stock or ETF for, that is when you would use a limit order. So if we click in the top right here, we can select limit order, and this will actually show us the current bid price and the ask price for Microsoft. So right now it's $453.24 as the bid and $453.32 as the ask. So that 8-cent difference between the two is referred to as the spread. And if you were to place a market order, the price would fall between those two numbers. But let's say, for example, that you wanted to buy one whole share of Microsoft, but you wanted to specify the exact price that you were going to pay. If you wanted to pay exactly $453 and no more for Microsoft stock, you could set your limit price at $453, and it would only fill that order if that specified price was met, and you can do the same exact thing on the sell side. Now, limit orders are not guaranteed to execute because there's no guarantee that Microsoft will hit exactly $453 a share, but this is helpful for those who are looking to specify exact prices for order execution. In addition, if you decide to trade stocks or ETFs in the Robinhood 24-hour market, which we're going to talk about later, you are only able to use limit orders during the after hours, so it is important to be aware of how these work. Now, the next order type is called a stop order. These are not as common, but I am going to show you how this works now. If we click on the information button in the top right, it's actually going to show us how these orders work. With a stop order, it's going to place a buy if the stock breaks above a certain price, or a sell if the stock breaks below a certain price. Once the stop price is met, it's going to trigger a market order, which is going to be executed immediately. Like I said, this is not too common, but if you're using technical stock analysis, for example, and watching charts and waiting for a stock to break out of a certain price level before you buy it, that is when you might want to use a stop order, for example. Or you could set a stop loss if you wanted to automatically sell a stock if it fell below a certain price level that you weren't comfortable with. The next order type we're going to cover here is called the stop limit order. This works very similar to the stop order, but instead of triggering a market order, it's going to trigger a limit order once the stop price is met. This shows us a visual here of what that might look like. So if you wanted to set a stop price at a certain level, but then trigger a buy order if it hit a different price level, you could specify that limit price, and you can do the same exact thing on the sell side. The next order type here is called a trailing stop order. And this is going to be a set percentage that trails or follows the stock each day, which can automatically trigger a buy or sell order. This type of order would be used if you wanted to automatically buy or sell a stock if it moved in excess of a certain percentage in a given trading day, but once again, it's not commonly used. For the most part, it's market orders and limit orders that you should be familiar with, but now you have a general idea of how these other order types work. And the last order type I want to show you here is the recurring investment, and this allows you to automatically invest in a stock or ETF on a routine schedule. So you could set the frequency here for every single market day, every week, every 2 weeks, or every month. So for example, if you wanted to invest in Microsoft every week on Friday, you could choose that, click on continue, and if you wanted to put $1 into Microsoft stock every single week automatically, you could do that through a recurring investment. These recurring investments are great for a strategy called dollar cost averaging, which is where you are automatically investing the same amount on a routine schedule, and this can allow you to pay close to the market average for that stock or fund over a long period of time. So if we take a look at Microsoft, for example, over the last 3 months, we can see how there have been some ups and downs, but overall it has trended upwards over the last 3 months. If you were buying this every single week, sometimes you would buy it when it was up high, sometimes it would be down low, back up high, high, back down low. And what this would do is help you to pay close to the market average for those shares over time. And this can be especially useful when you're investing in something like an S&P 500 ETF. But what we're going to do now is just click on the trade button. We're going to click on buy, and we're going to invest $10 at this point through a market order in Microsoft. Now, one other thing I want to show you here, if you're looking to invest in whole shares versus individual dollars that are fractional shares, you can click the top right and change this over to buy in shares, and you could buy one whole share of Microsoft for $453.78 at this point in time, and it fluctuates all of the time based on the buying and selling of the stock during market hours. But we're just going to change this back over to buy in dollars. We're going to type in 10, and then we're going to click on review, and this is going to buy us 0.02204 shares of Microsoft. And just like before, we're going to swipe up, and because this was a market order, it filled immediately at a share price of $453.51. So if we click on done, it's going to bring us back to the Microsoft page, and we can scroll down and see what my current position now looks like. So at this point, I'm now up 3.35% overall in my Microsoft investment, seeing as I had fractional shares from a prior demo video. Now, another common question asked is, how can you tell if you're making money on Robinhood? One way to do this is to track the total value of your portfolio, but this can get complicated if you are bringing money in and out of your Robinhood account. If you take a look at the charts here over the last week, for example, this portfolio is up 0.26%, but over the last 3 months, it's up 4.24%. But you want to know how to track each of your investments specifically to see which ones are going up and which ones are going down, and hopefully you have a positive return on all of your individual investments. But what you can do here is scroll down to the stocks and ETFs section, and if you tap on this button here, you can change these details to show different information. So right now it is showing the total percentage change, so you can see here that overall I'm up about 3.5% on the Microsoft investment and 5.75% on VOO, or the Vanguard S&P 500 ETF. You can also click on this and change it to your total return, and this shows you the dollar value that you have gained from each one of these investments. So for example, if you invested $100 and that investment grew to 110, that would be a total percentage return of 10%. And then in addition, like I showed you before, if you want to get more information, you can click into a stock or ETF that you own and scroll down to your position, and this will show you today's return as well as your total return, your average cost or cost basis, as well as the number of shares that you own in that particular stock or ETF. But now let's say, for example, you're looking to lock in some profits and sell off a portion of an investment that you own in Robinhood. We're now going to sell off a couple dollars worth of VOO using the fractional shares. So what you're going to want to do is click on the trade button just like before, but instead this time we're going to click on sell, and this is going to bring up the standard market order. Now, like I showed you before, you can open up this and look at the different order types if you wanted to use those. You could also sell in whole shares if you had whole shares of stocks or ETFs to sell. But in this case, we're just going to sell in dollars, and we're going to sell off $5 worth of VOO for this example. So just like before, you're going to type in the dollar value that you're looking to sell, and then you're going to click on the review button, and this is going to sell off 0.00969 shares. And when you're all set, you just go ahead and swipe up. And just like that, we sold off $5 worth of VOO. Now, after you sell a stock or ETF, you have to wait for those funds to settle in your Robinhood account before you are able to withdraw them to your bank account. And that's going to take 2 business days. So for example, if you sold on a Monday, you would be able to withdraw those funds on a Wednesday as long as there were no holidays in between. What you're going to do here is click on the person icon at the bottom right, and then you're going to click on the 3 lines in the top left, and then you're going to navigate over to the transfers section of the app. Under transfers, you'll see the option here for transfer money, so you're going to go ahead and click on that, and this is going to allow you to choose the from account and the to account. In this case, the From account is going to be your Robinhood individual account, and the To account is going to be either bank account that you have selected. Now, you do have two options when initiating a withdrawal. You can either do a free transfer, which will take 4 to 5 business days, or they offer an instant withdrawal feature that is going to come with some fees. So you can take a look at those fees and make a decision on your own. But I've always found that for the most part, when I process a withdrawal, it shows up much quicker than the estimate that is given here. Now, in addition to trading stocks and ETFs, you can also trade cryptocurrencies within the Robinhood app. So let me go ahead and demonstrate that now. What you're going to do from the home page here is click on the crypto section of the app, and this is going to open up a separate Robinhood crypto portfolio. If you scroll down here on the crypto section, you can see the top 5 daily movers, and you can also explore different tradable crypto assets. But what we're going to do here is keep things simple and make an investment in Bitcoin. So if we click on the search icon in the top right, we can type in Bitcoin, and we will see that populate at the very top. And just like with the stocks and ETFs, you can take a look at the performance here of Bitcoin or the particular crypto asset over different periods of time. When you're ready to buy, you're going to click on the buy button at the very bottom, and you can invest in dollar amounts just like with the fractional shares. And you can also change this here if you want to automatically invest in certain cryptocurrencies on a set schedule, but we're just going to do a one-time buy. So we're looking to put $10 into Bitcoin. You can also change the order types if you wanted to do limit orders, stop orders, or stop limit orders with cryptocurrencies. And if you wanted to invest in a whole Bitcoin, for example, if you had 58,000 or so, you could do that here, or you could put in the exact fractional amount of Bitcoin that you were looking to purchase. Since we're doing a small amount, we're going to change this back over to buy in US dollar, and we're going to put $10 into Bitcoin. Now, this is going to inform you of the spread associated with this investment, which is a 4-cent plus or minus that your order might be filled at, and this is going to allow us to buy 0.0001719 Bitcoin. Just like before, when you're all set, you're going to swipe up, and just like that, we invested $10 in Bitcoin through the Robinhood app. If we click on the done button and then we go back to our main crypto portfolio, we can see that we have $9.96. So because of that 4-cent spread, it's not a whole $10. Another question you might have is how to send and receive Bitcoin using Robinhood. This was a feature that they didn't offer in the past, but you are now able to do this. So if you had Bitcoin or other cryptocurrencies in different wallets and you wanted to either move that over to Robinhood or send the Bitcoin that you bought out of Robinhood, here's how you would do that. You're going to click on the Bitcoin or the crypto underneath your holdings, and if you scroll down, you see the option here for sending and receiving. In order to send Bitcoin, there's going to be some additional verification steps where you have to set up 2-factor authentication. I'm not going to get into that in this video, but I may do a full Robinhood crypto tutorial at a later date. So if you want to be notified when that comes out, be sure to subscribe and hit the bell. If you click on the receive button, this is going to bring up your crypto wallet address, and you can either copy this or use the QR code if you want to scan it to send crypto over to your Robinhood wallet. While I don't personally recommend trading options as it can be extremely risky, let me show you how you would find these within the Robinhood app. The first thing you have to do is actually enable options trading, and to do that, you're going to click on the person icon at the bottom right, the 3 lines at the top left, and then you're going to open up the investing tab here, and then if you scroll down here, you'll see where we have the options trading enabled, and we have level 2 options. There are different levels of options which are going to give you different types of options that you can trade, and this is going to be based on a questionnaire that you answer when you enable options trading. You also have the option in here to enable margin investing, which we're going to talk about later. It's another thing I don't recommend, but I do want to show it to you just so you see all of the different features. And you can also enable the stock lending program, which we're going to talk about later on. But for now, we're going to go back to the home page, and we're going to open up the page for Microsoft and take a look at some different options. Let's say, for example, you thought Microsoft stock was going to soar by the end of the year, so you wanted to buy a call option to speculate on the price of Microsoft. Microsoft. Each call option contract that you purchase gives you the right but not the obligation to buy 100 shares of Microsoft at a set price from the seller of the option. So if Microsoft stock was theoretically at $150 a share and you thought it might go to $200 per share by the end of the year, you could buy a call option with a strike price of $175 and an expiration of January 3rd, 2025. One of the most important things to understand about options is they have an expiration date. So if things don't work out for you and the price doesn't move in the direction that you expect, it's entirely possible and very common to lose 100% of the money that you invest into the options contracts. But anyways, let's say for example, Microsoft stock went up after you bought your call option. Well, that means that your option would go up in value too. And then if Microsoft stock rose above that theoretical $175 price level, your option would be in the money at that point in time. From there, you could exercise that option, which would mean that you would actually purchase those 100 shares that you have the right to purchase. But in most cases, people aren't going to exercise the option, and instead what they're going to do is sell it to somebody else at a higher price. However, if Microsoft stock stayed at that theoretical price of $150 for the rest of the year and it never broke out above $175, your option would expire out of the money and it would be completely worthless. In addition, the value of your option contract would fall dramatically as the end of the year approached because it would be less and less likely that that price level would be met. So even if you wanted to try to cut your losses and sell it early, you would still likely lose a huge sum of money. But nonetheless, here is how you would access that within the app. We're going to click on the trade button here, and then we're going to click on trade options, and this brings up the options section. Now you do have some demos here where you can learn about different types of options trading, but we're not going to get into that in this video. I might do a full Robinhood options video later, so let me know in the comments down below if you guys want to see that. Let's say for example you wanted to buy a call option because you thought Microsoft was going to go up in price in the future. At the very top you have different expiration dates for options contracts. The first thing I want to show you is just how volatile these options can be. If we look at options that are expiring today that are call options, we can see here that options that are out of the money have dropped dramatically. For example, this 477.50 call dropped 75% just today. The current share price for Microsoft is $453.69, so the price would have to go up quite a bit for that option to be in the money by the end of the day, so it's almost guaranteed to be worthless, hence why it has dropped so much in value. But let's say you wanted to buy options that expired January 17th, 2025. It's going to show you the current share price of Microsoft stock, and anything below that is going to be options contracts that are already in the money, and the ones above that are going to be out of the money. So let's say you thought it was going to hit 475 by the end of the year. You could look at a contract like this, for example. So if you wanted to actually purchase this call option on Microsoft, it would cost you $2,625.03 as the premium paid, and this is what you are paying to have the right but not the obligation to buy Microsoft at $475 per share anytime between now and the expiration date of that option contract. Now the premium is actually going to get paid over to the seller of the option contract, and if the option expires out of the money, they just get to keep that money. But if the price does rise above $475 and you decide to exercise, or whoever you sell it to, if they decide to exercise, the seller is required to sell those shares of Microsoft at that price, no matter what happens in terms of the price going higher from there. Now, if you wanted to bet against a particular stock, you could purchase what's called a put option, and with these, you're going to make money as the stock goes down in price. But just like with the call options, there is a premium that you have to pay, and if it moves in the opposite direction of your bet, you can lose a substantial amount of your money or all of your money if it expires completely out of the money. Now, earlier on, we mentioned if you want to maximize your return potential with something like an S&P 500 investment that you should reinvest those dividends. Let me show you how to enable that setting now. You're going to click on the person icon and then the three lines once again, and then you're going to click on investing under the menu, and you can see here if we scroll down that we have dividend reinvestment enabled. If you want to edit this setting, you'll click on edit dividend reinvestment, and if you have this turned on, it's going to automatically reinvest your dividends back into whatever stock or ETF issued them in the first place, and this is a great strategy to consider for something like an S&P 500 investment. While we're in this menu, I also want to show you how to contact Robinhood support should you have any questions or issues that you run into with the Robinhood app. We're going to click the back button here, and from this menu here, if we scroll down, you have the option here for Robinhood support, and then you can either leverage the help center if you want to search for your question, or you can contact them 24/7 using this button here and choosing what you have a specific question about. And you also have the option here for viewing your prior support chats. So Robinhood does offer 24/7 support through chat, and that can be great if you have any questions or problems you run into when you're using the Robinhood app itself. Now, one of the latest additions to the Robinhood app is the retirement accounts, and you're going to view those by going back to the main section of the investing app and then clicking on the middle button here to open up the window here for Robinhood retirement accounts. Robinhood offers different types of IRAs, including the Roth and traditional IRA, and in addition to that, they offer an unheard of incentive of matching your contributions to your IRA account, and this is similar to a 401k that has a company match, for example. As you can see here, anyone with a basic Robinhood account can get a 1% match on any amount of money that they contribute to their IRA, and you will also get this amount if you transfer an existing retirement account over to Robinhood. And if you wanted to open up a Robinhood IRA, you would simply click on the Get Started button here at the bottom, choose either a Roth or traditional IRA, and then go through those account opening steps. Now, for the Roth IRA, it mentions the different income limitations and withdrawal rules, so you'll want to familiarize yourself with that. I do have a full video on Roth IRA investing that I'll put in the corner if you want to learn more about that. Now, as mentioned, the Robinhood IRA comes with a 1% match, but if you are a Robinhood Gold member, which is their premium service that we're going to talk about shortly, they actually increase that to a 3% match on your contributions. So for example, if you open up a Roth IRA and contribute the maximum of $7,000 for those who are under 50 years old, you would either get a $70 match at the 1% level or a $210 match at the 3% level if you have Robinhood Gold. With a Robinhood retirement account, you can either pick and choose your own investments like I've been showing you so far, or they offer pre-built portfolios that you can invest in that mean you don't have to do any manual selection of your investments. Now, another important aspect to investing is managing your cash allocation. Whether this is money on the sidelines that you haven't invested yet, or maybe it's your emergency fund, you can earn a high yield on that through the Robinhood Cash Sweep program. If you enable this feature, it's going to move your uninvested cash over to a network of FDIC-insured banks that Robinhood is partnered with. Now, as a Robinhood Gold member, they will currently pay you a 5% APY on your cash, and that rate is subject to change over time. Without Gold, it's just 0.01% APY on your uninvested cash. So with that being said, let's now explain what Robinhood Gold is and what the cost is for that. Robinhood Gold is a premium subscription offered for $5 per month, and it unlocks a number of different premium features. First of all, as mentioned before, it's going to get you instant deposits of up to $50,000. In addition, you'll also get access to Morningstar research reports for hundreds of different stocks in the Robinhood app, and that can be helpful if you're looking to research individual stocks to invest in. In addition, this will get you access to level 2 market data, which is going to show you more detailed information about the buyers and sellers of stocks. You'll also get that 3% match on your IRA contributions, as well as up to $1,000 in margin to invest with. Now, we're going to talk about Robinhood margin shortly, but it's important to understand that you don't have to use Robinhood margin even if you are a Robinhood Gold member. It's a separate setting that you're going to enable within the app. And finally, if you use the Cash Sweep program, this boosts your interest earned from 0.01% to 5% APY. Next up, let's cover Robinhood margin. Investing on margin means that you are borrowing money from your broker in order to have more money to invest with. And the way this works is they will typically match you $1 for every dollar that you have invested in eligible assets that can be borrowed against. However, just like any other loan out there, you do have to pay interest interest on this loan, which currently starts off at 6.75% interest. And just like the APY on the cash sweep, these rates are subject to change. When you invest borrowed money, you're essentially magnifying the potential gain or loss that you'll experience. Let's say you had $1,000 in your Robinhood account and then you enabled margin and borrowed another $1,000 to invest with, giving you $2,000 total. And then let's say you put all of that into a stock, and then after their earnings report, that stock drops 25%. You would lose 25% of the $2,000 invested, which would actually be $500. And since you only had $1,000 of your own money in that account, that would actually be a 50% loss on your investment. More often than not, that's exactly how margin investing plays out, and you end up magnifying your losses versus magnifying your potential gains. And if your portfolio drops substantially in value when you have margin enabled, this can result in something called a margin call, which is where they can require you to deposit additional funds, and if you don't do this in a certain period of time, they can actually sell off whatever else you have in your portfolio to get the money that they lent you back. As I'm sure you can see now, margin investing is extremely risky. It is not recommended for most investors out there, but it is available in the Robinhood app if you want to explore this later on after better understanding those risks. Moving on now, another new feature that Robinhood has rolled out in their app is the Robinhood Gold card, which is actually a credit card that earns 3% back on all categories and 5% back on travel plans that are booked through the Robinhood travel portal. For the time being, there is a wait list for this Robinhood Gold card as it hasn't yet been released, but this is a perfect example of how Robinhood continues to release new and innovative financial products. Another popular option here in the Robinhood app is the stock lending program, and this is a setting that you can enable in the invest section of the app. If you enable stock lending, Robinhood will be able to borrow your shares and loan them out, and then if your stocks are lent out, Robinhood will pay you a portion of the money collected in interest on that loan every single month, and you're still able to sell your stocks and ETFs at any time. Robinhood will loan those shares out for various purposes, but one of the most common is short sellers who are looking to borrow shares. This is a more complicated investing strategy that involves borrowing shares and then selling them and then buying them back at a later date to make money from the share price declining in value. So that's just one example of why these shares might be lent out. It's optional, but if you wanted to earn extra money in your Robinhood account, you could look into the stock lending program. Another feature that you might want to take advantage of is the Robinhood 24-hour market. This is a newer feature that allows you to trade hundreds of stocks and ETFs for 24 hours a day on the days that the market is open. The 24-hour market starts trading at 8 p.m. on Sundays and stops on Friday at 8 p.m. Eastern Standard Time. Now, it's important to understand that trading in the 24-hour market is more volatile, which means there are greater up and down price moves, and that's because there are less overall participants in the market at that point in time. For that reason, you can only use a limit order if you're using the Robinhood 24-hour market, but if, for example, you wanted to buy a stock late in the night after they reported earnings, you could do so with the Robinhood 24-hour market. The last thing we're going to cover here is the taxes associated with your Robinhood investing account. And if you decide to use the retirement account feature or the cash sweep program, there are going to be additional tax implications with both of those. But with a traditional taxable brokerage account, if you sell any assets for either a gain or a loss, you will receive a tax form at the end of the year from Robinhood. It's going to be in digital form, and they're also going to send a copy of this to the IRS. These forms normally become available in the middle of February, and you can access them by looking at the tax section of the Robinhood app under the account settings. So you'll need to retrieve this digital copy when you file your tax return yourself or supply this information to your tax preparer. There you have it, guys. You now know the ins and outs of the Robinhood investing app. If you made it to the very end, please be sure to drop a like on this video, as well as subscribe and hit the bell for future notifications, as I may be doing a full video on Robinhood options trading as well as Robinhood crypto. Don't forget to use my affiliate link down below or visit ryanoscribner.com/Robinhood when you sign up for an account to get a free stock worth up to $200. You can click below to watch my video about how to invest in the S&P 500 for beginners, and I'll see you there.